Hey guys, Jamie Benizri from Legal Logic. As you know, we've really spent a lot of time trying to educate our audience. Particularly tonight, we have a Twitter session where we're going to be using our thumbs and we're going to be answering questions in real time. Anyone from a mechanic to a tech startup to a doctor to an accountant, anyone who's got questions about corporations from federal to provincial to any question that really relates to tax perspectives, we're going to have tax guys who are going to be able to answer questions as well. We figured we'd give you a taste and just give you some reflexes for tonight, so when you're thinking about the questions that you have about incorporating, you already have a little bit of insight as to where you should be directing your questions and some of the reflexes you should have. So today, very quickly, I got my boy Chuck from Sun Life, life insurance advisor.
Yes, thank you.
Thanks for being here, man.
Thank you.
And I got two of my boys from Serene Cloud Accounting, David Caron.
Hey.
Hello.
And Marco Frate.
Thank you.
These gentlemen have agreed to join me on this very I'll call it a snap panel, so we can have a little bit of reflex, so we can kind of diffuse it to the community. And I want to know today, a lot of people come to me and they say, look, Jamie, I spoke to my accountant, and he's telling me I'm not making enough money. He's telling me that I need to be making $100,000, $200,000 before I should consider incorporating. So the lawyer's reflex is always very different. I'm very kind of protective of your liability. I want to make sure that you're not going to get screwed in a business transaction or in any other circumstance. So I'm not looking at the financial part. So what do you say to people who want to have a certain threshold? What is your rule of thumb generally, Marco, about how do you answer, when is the right time to incorporate from a tax perspective?
All right, so a lot of times I'll get the same question, right? And it really depends on, do you need all the revenue you're generating in that business? Should you be, so the idea with the corporation is we save tax because we can do some tax planning, but also it's a tax at a lower rate. So if you don't need all the income right away, it doesn't make sense to pull it out of the company. So you'll pay the lower tax in the corporation, then once you take it as salary or dividend, you'll pay that difference that it would have been taxed at if you had just not incorporated.
Yeah.
So let's say you need $100,000 to live. That's what you're making in your company. It wouldn't necessarily make sense. You don't have to incorporate for that, since all the money coming into the corporation you would pull out anyways.
Yeah, you need that money. You mentioned two very interesting points. You mentioned corporate tax rates.
Yep.
So I want to ask you two questions. One, what are the corporate tax rates versus the personal tax rates? And you also said something that's very interesting. People ask me all the time: do I take a salary or do I take a dividend when I have that corporation?
Yep.
So what do you have to say about that?
So corporate tax rates, you're looking at about 19%. Leave it in the company. If you're taking that in personal, the highest bracket, you're probably at almost 50%. And then your other question was around the salary versus dividend.
Right, yeah, exactly.
So again, with the clients, we look at your personal situation. Salary, when you're going to pay salary out of the company, you're going to pay payroll taxes.
Okay.
A dividend, you won't. Pay a salary, it's a deduction as an expense in the company. A dividend isn't.
So it really depends on the
It depends on the situation.
Yeah.
Yeah.
Cool.
Yeah.
People always ask me all the time, if I incorporate, I got to get tax numbers, which is not true. Tax numbers are a function of sales and industry specific. So what do you have to say about tax numbers? And what's the threshold, and how do you see that differently in a corporation versus a personal business?
Mm-hmm. So with the threshold for GST, QST, for example, we look at a $30,000 rate sales amount. Anything over that, then you're obliged to get your tax numbers. And that's whether corporate or personal.
Okay, that's a good distinction, because people ask me that all the time, and people have the misconception that as soon as you incorporate, you got to get tax numbers and you got to start acting this way. So that's a good point as well. I want to talk a little bit, because Serene, you guys, on your business card it says cloud accounting. So a lot of the good buddies that I know, and Ryan Lazanis at Zen Accounting, and Mark Eric at CloudMeb, who we know well. A lot of these guys are penetrating this industry, and I almost consider it Uberizing bookkeeping and democratizing or decluttering the industry. Mr. Caron, why don't you tell us a little bit about why cloud accounting and what's happening in the industry that's kind of pushing people to do this?
Yeah, we're very committed to using bleeding edge technology. Gone are the days of going to your accountant with your big shoebox full of receipts. So yeah, we're committed to using cloud-based tools. This allows us to do a lot less data entry, and it allows us to focus a lot more in an advisory role instead for our clients.
Do you think that bookkeeping as we know it will be eradicated or completely changed in the next 10 years?
Absolutely, yeah. Yeah, I think modern technology is going to make a lot of bookkeepers redundant if they're not careful. So they sort of have to pivot and really focus on the advisory role for their clients.
Okay, and bookkeeping in a corporation versus a sole proprietorship. Do you see any differences there? Something that the corporation needs to be more careful about when in bookkeeping? Is cloud accounting available to both?
Yeah, definitely. The only difference would be complexities of the type of accounting you're doing in a corporation versus a sole proprietor. Not to say you have a sole proprietor that isn't complex transactions, but when it gets to that level, you usually incorporate. But the concept of cloud accounting we can do if you're a sole proprietor or a corporation.
Okay, that's great.
Works exactly the same.
We'll get to my boy Chuck. So Chuck, we talk a lot about corporations, and you and I deal a lot with things like insurance, funding a shareholder agreement in the event of death and in the event of disability. So tell us a little bit about how we can use products that you sell as investment tools, within a corporation. Tell us a little bit about the products that we see that are available to corporations that aren't necessarily available to sole proprietorships.
Well, there's a couple different products that we can go with. First, on the life side, we can have multiple partners. We can take out something like a term 10 and have a little benefit for the cost of the business. As the business is growing, so will this coverage. And the funding is so much cheaper to take out a policy, because at the end of the day, do you want your partner spouse to be your new partner in case of death? Not really.
And this is the corporation that's taking out the policy?
Yeah, everything's going to be worded in the shareholders agreement with your help, obviously.
Obviously.
And it works simply that in case of a premature death, the funds go into the CDA account and
The capital dividend account.
Exactly.
And then it gets paid out to the family or the business tax-free
Exactly.
at the time of death.
Exactly.
And that's only available to corporations, or is that available to sole proprietorships, people who are unincorporated?
It's available for both.
For both, okay.
Yeah, so they do have that feature, and it's a lot less costly than taking out money out of the company when that money could be used for the day-to-day operations, or taking out a loan and paying interest on that.
Okay, great.
The most tax-efficient way.
And tell us about critical illness is an important product as well. Or I should say even key man insurance, even before we get to critical.
Yeah.
Key man, the person who runs the business, the most important person in the business. Tell us a little bit about that.
Well, that's it. The odds are we're going to get sick before we die. And if that's the case and that key person is no longer able to generate revenue, well, then that's lost revenue for the company. And so a critical illness policy kicks in to replace that person, so you can have some money to replace that person to generate revenue, and also some money for that individual to get better.
And that's a policy that could be within the corporation as well.
Exactly.
Okay.
And the corporation could pay for it. And knock on wood, if the person does not become disabled, they can have 100% of those premiums returned to them.
And you'll agree that those insurance policies are deductible within the corporation as well?
The life insurance is not.
Is not.
It's not.
Okay.
But from the point of view he takes on terms of buy now or replacing that shareholder, it's key to any corporation.
Okay, cool.
You don't want to get stuck with the children or like say the spouse.
Okay. And so I'm going to stop there because so that's it. Here's the Snap panel. Words of wisdom from my boys at Serene Cloud Accounting. My boy Chuck, Sun Life. So these are the reflexes I want you guys to have when formulating your questions, regardless of your business. I want you to send me some tweets. I want you to send me some snaps, whatever the hell you're going to send me, so that we can answer your questions in real time by Twitter on Legal Logic. And these gentlemen will be able for follow-up conversations. They'll be tagged in the posts, so you can communicate with them freely for any insurance or any tax or accounting advice whatsoever. Thank you very much. Jay Benizri.